It's been 6 weeks since the Congress convened, and what we've seen is that the agenda that credit unions are bringing to Congress pretty closely aligns with what Congress wants to do. So we have asked Congress to stop merchant data breaches, and we've seen hearings in the House Energy and Commerce Committee and the Senate Commerce Committee on those issues, and those are just the first of what we expect to be several hearings on data breach and cybersecurity. We've also seen Congress take some small steps towards removing barriers for credit unions to more fully serve their members. And the manifestation of that was really last week in the Senate Banking Committee's hearing. We were real pleased to be able to present testimony before the Senate Banking Committee last week. Wally Murray, the President and CEO of Greater Nevada Credit Union in Carson City, Nevada, did a fantastic job representing credit unions before the committee, and he laid out a pretty ambitious agenda for removing barriers. We talked about the improvements that need to be made to the Federal Credit Union Act, and also how the Federal Credit Union Act really hasn't seen substantial amendment since 1998. So the time's now to modernize that act. We also talked about some of the burdens that the Dodd-Frank Act and the Consumer Financial Protection Bureau have imposed on credit unions, and the need to more narrowly focus those regulations on the large banks and the abusers of consumers. Now, the next step is to get more feedback from credit unions. One of the things that Chairman Shelby asked for and other members of the committee asked for were specific examples of regulatory burden. There is a tremendous desire on their part to put together a regulatory relief package, and we need to work with them to get it done. Before Congress recessed last week, Representatives Peter King and Brad Sherman reintroduced the Supplemental Capital legislation in the House of Representatives. About a dozen members joined them in co-sponsoring that legislation, and it was a key piece of our testimony in the Senate Banking Committee, and it was also an important part of NCUA's testimony when they were before the committee last week as well. The next step for that legislation is to continue to talk to members about the bill. NCUA has asked for comment on supplemental capital as it relates to risk-based capital. So we'll be doing that. We hope others will too. And we're going to try to get a bill introduced in the Senate this spring. GAC is just 2 weeks away, and I am really excited to have nearly 5,000 credit union advocates in town. We have a robust and bold agenda to talk to Congress and regulators about. It starts with preserving the tax status. Congress is talking about tax reform. If you're not at the table, you're on the menu. We want to be at the table at that discussion, telling them how we are fulfilling the mission that they have given us to promote thrift and provide access to credit for provident purposes. We want to tell them to preserve the tax status so we can keep doing that going forward. We bring nearly $10 billion of benefit to consumers every year. There's more that we can do, and it starts with preserving the tax status. We're also going to deliver a message that Congress needs to stop the merchant data breaches. We know where the weak link in the payment system is. It's at the merchants. And the reason it's the weak link is because they're not required to hold personal financial information using the same standards that credit unions do. That needs to be fixed. We need to be able to tell credit union members where breaches occurred, and we need to expedite the reimbursement process, because right now credit unions are left holding the bag when these breaches take place. It takes years to get reimbursement. That needs to change. Finally, we're going to deliver a strong message that Congress needs to remove barriers so credit unions can better serve their members. It starts with improving and modernizing the Federal Credit Union Act, and it also involves making sure that rules, regulations that are coming out of the CFPB and that are a result of the Dodd-Frank Act are targeted to the big banks and the other abusers of consumers. Credit unions weren't part of the problem, but they're certainly being impacted by the solution to the problem. We need to tell Congress, remove those barriers, let credit unions serve their members. That's the key message that we're going to be delivering at the GAC.